hearings virtually. We appreciate you joining our efforts to provide an open and transparent process while taking into consideration the health and safety of everyone involved in the proceedings. And we thank all parties and participants for agreeing to conduct today's hearing electronically. OTA is committed to ensuring that this change to virtual and electronic hearings will not impact the fair, objective, or timely processing of tax appeals. Live stream and public record. This oral hearing is being live streamed online on OTA's YouTube channel. Please do not use Cisco Webex's chat feature. A stenographer will transcribe the hearing. The video recording and the transcript are part of the public record and will be posted on OTA's website, but only the transcript is part of the official oral hearing record. Technological problems. In the event of connectivity issues, our staff may attempt to resolve the issues. If a party is disconnected, we may stop the hearing, take a recess, and attempt to resolve the problem. If we cannot get sufficient audio quality using video conferencing, we may attempt alternative methods, such as calling in to participate telephonically. Showing documents online. Because this oral hearing is live streamed online, please do not show any documents on the screen that might raise objections based on privacy or other concerns. If you plan on showing a document, before doing so, please describe the document and ask the lead administrative law judge for permission to show the document. General guidelines. Please state your name each time before you speak. Please do not speak over each other. Please wait to be called on to speak. If you need to get the attention of the lead AOJ, you may interrupt, but please wait for the lead AOJ to acknowledge you before you start to speak. Other considerations. To avoid audio feedback, please mute your microphone when you are not speaking. If you are speaking too fast or if the stenographer cannot understand you, the stenographer may interrupt you. If the taxpayer wants to consult with the taxpayer's representative during the proceedings, please mute your microphone. Before we begin the oral hearing and before going on the record, you will have an opportunity to ask administrative and procedural questions. With that said, Ms. Lindo, do you have any questions regarding the virtual hearings general information that I just shared? Ms. Lindo, if you could unmute your microphone, let me know whether you have any questions.
Rosas, this is Gabriela Lindo. No, I have no questions.
This is Judge Rosas. Thank you, Ms. Lindo. And Ms. Jimenez, any questions?
Judge Rosas, this is Mary Flor Jimenez. No questions.
Before going on the record, Ms. Lindo, do you have any just general administrative or procedural questions?
Judge Rosas, no, not that I could think of right now.
This is Judge Rosas. Thank you, Ms. Lindo. I'm glad that our two pre-hearing conferences were sufficient to address all concerns. I'm glad we're ready to proceed. If our stenographer may begin, we're going to go on the record. Good afternoon. We are on the record in the matter of the appeal of W. Distin, OTA case number 19-04-4591. This matter was originally scheduled to take place in Cerritos, California, but because of the ongoing concerns with COVID-19, this matter is being held virtually. Time is approximately 2:19 p.m. The panel of administrative law judges includes Daniel Cho, Richard Tay, and me, Alberto Rosas. And although I may be the lead administrative law judge for purposes of conducting this hearing, please know that this panel, the three of us, we are all equal participants and equal decision makers. We held two pre-hearing conferences in this matter. I'm just going to go over some of the key and relevant orders from those conferences. The first pre-hearing conference was held on September 8th. which resulted in 6 orders. I'm going to list the top 4, the 4 most relevant to today's hearing. Number 1, Appellants Exhibits 1 through 46 were admitted into evidence without objection. 2, Respondents Exhibits A through E, Alpha through Echo, were admitted into evidence without objections. 3, only one witness shall testify at today's oral hearing, and that's the appellant, Wilton Distin. And 4, the parties shall comply with the hearing time limits that we discussed during the pre-hearing conference. We held a second pre-hearing conference on September 24th, 2020, which resulted in 4 orders. Number 1, Exhibit F, Foxtrot, was not admitted into evidence, but that is subject to reconsideration. Number 2, Exhibit H, Hotel, was not admitted into evidence. 3, Exhibit I, India, consists of a 4-page response to appellant's opening brief. This was not admitted into evidence. However, the 3 exhibits attached to the 4-page response were admitted into evidence. And 4, Exhibit J, Juliet, was not admitted into evidence, but this is subject to reconsideration. I do want to discuss 2 additional exhibits. Respondents Exhibit G, Golf, which is correspondence with prior representative, 6 pages, and appellant's latest exhibit, Exhibit 47, which is the administrative protest emails and consists of 3 pages. To summarize, it is my understanding that Ms. Lindo, you have no objections to Respondent's Exhibit G, Golf, so long as your Exhibit 47 is also allowed into evidence. Is that correct, Ms. Lindo?
Judge Rosas? The connection, Judge Rosas? Yes. The connection is going in. I don't know if everyone else is experiencing that, but that is what we're experiencing on this end. So we're not hearing every single word you're saying.
Thank you, Ms. Lindo, for bringing that to my attention. By waving of the hands, anyone else experiencing sound issues regarding the inability to hear me? I'm not seeing any hands. Ms. Lindo, there might be some issues on your end, but just to summarize, Ms. Lindo, because I don't want you to have missed anything. Ms. Lindo, I just recapped the orders from the 2 pre-hearing conferences. I just recapped those orders. And then I was discussing the 2 additional exhibits. Exhibit G, Golf, and Exhibit 47. Ms. Lindo, regarding those 2 exhibits, in summary, it's my understanding that you would waive your objection to Exhibit G so long as your Exhibit 47 can come into the evidence. Is that correct?
Judge Rosas, I'm so happy a little difficulty. It's not that I'm not hearing you, you're getting cut off. So I'm hearing like every other word. I understand the gist of what you're saying, so hopefully that will work. Yes, I would like to submit my exhibit, so I no longer object to the exhibit.
This is Judge Rosas. Thank you, Ms. Lindo. Ms. Jimenez, any objections to Appellant's Exhibit 47?
Judge Rosas, this is Mary Flor Jimenez. I have no objection to Appellant's exhibit.
This is Judge Rosas. Very well. In that case, OTA will go ahead and admit Respondent's Exhibit G, Golf, and Appellant's Exhibit 47 into evidence. As we discussed at the first pre-hearing conference, there are 2 issues for OTA to decide. Issue 1 is whether any additional reduction to the amount of unreported taxable sales is warranted. Issue 2, whether appellant has established reasonable cause for relief of the finality penalty. As we discussed, both sides will have an opportunity to provide a brief opening statement, 2 to 3 minutes at the most. Ms. Lindo, whenever you're ready, you may proceed with your opening statement for the appellant.
Of the issue, the taxpayer, Wilton Distin and Jamaican restaurant, a tiny takeout restaurant located at LLC, Inglewood, California, is operating as a Schedule C sole proprietorship. Hungry Joe's reported taxable sales, excluding tax, of $324,393 in 2009, $225,809 in 2010, and $204,613
Ms.
in
Lindo.
2011. Yes.
Ms. Lindo, my apologies, just Rosas. My apologies for the interruption. Our stenographer, Ms. Alonso, is indicating that she's unable to understand you, that the connection is really bad. Give me 1 second. We're going to try to, just bear with us. We're going to try to see if there's an alternative option, perhaps asking you to call in. Give me 1 second as we try to ascertain what the issue is. I ask everyone for their patience.
Judge Rosas? Can I speak?
Ms. Lindo.
I turned down my volume. I don't know if that would help.
Let's try that. If not, we'll take a brief pause and perhaps ask you to opt for calling in. But on my end, that sounds a lot better with the lower volume. So let's go back on the record and let's continue. Ms. Alonso, whenever you're ready, but please, Ms. Alonso, let me know if you're having additional difficulties in hearing Ms. Lindo. But at this point, Ms. Lindo, please proceed whenever you're ready with your opening statement.
You hear me?
Yes, we can hear you.
I don't think they can hear me. Okay. In January 2012, the Cdtfa, which I'll refer to as the department, contacted the taxpayer for audit for the time period 2009 through 2011. And this was the taxpayer's first audit. Determined that the taxpayer has unreported sales of $728,000.
Ms. Lindo, my apologies for the interruption.
Totaling $1,483,000.
My apologies for the interruption.
Yes.
It seems like we're having a very difficult time hearing you. It's not just me. Our stenographer and some of my co-panelists are indicating the same issue. Can you try calling in telephonically? Ms. Linda, I wasn't sure if you were able to hear that. I was inquiring and asking about whether you were able to log off from the video conferencing and try to call in telephonically using the phone number that was provided in the oral hearing packet.
Okay, I'll have to look for that. Okay, Judge Rosas?
And I'm going to see if staff can re-email that to you as well, but I'm reluctant to provide that phone number over the live YouTube channel because anyone hearing may be able to call in. So bear with us. We're going to see if we can provide that number to you. Someone's going to contact you, Ms. Linda, and walk you through the process, so just bear with us. want to thank everyone for their patience. Someone from OTA has contacted the appellant, and the appellant's rep and is walking them through the process. So please bear with us. Thank you.
Hello? Is this any better? I hear echo. Oh, it's because of the phone, right?
Yeah, I think that's fine.
Okay, how about we try this again, Ms. Lindell?
Okay, so I'm gonna hang up.
And Ms. Lindo, if you can just begin from the top of your opening statement. Thank you.
This is Pamela Lindo speaking, Judge Rosas, to give you a quick summary of the issue. The taxpayer is Wilton Distin, doing business as Hungry Joe's Burgers and Jamaican Restaurant, a tiny takeout restaurant located in a low-income, crime-ridden neighborhood of Inglewood, California, and is operating as a Schedule C sole proprietorship. Hungry Joe's reported taxable sales, excluding taxes, of $324,393 in 2009, $125,809 in 2010, and $204,613 in 2011, a total of $754,815. In January of 2012, the Cdtfa, which I'll refer to from this point as the department, contacted the taxpayer to audit these time periods. And it was the taxpayer's first audit. It is the taxpayer's first audit. Now, over 9 years later, after several revisions, the department has determined that the taxpayer has had unreported sales of $728,525. They are claiming, therefore, that the taxpayer made taxable sales of totaling $1,483,340 for the audit period, which is an average of $495,000 per year. Historically, since inception in 2000, the taxpayer has had a steady increase in sales each year. The only exception to that historical pattern was the years under audit, 2009 through 2011. The overwhelming evidence today will show that the sole reason for the decrease in sales during the audit period was the well-known Great Recession. And the evidence will show that the department has completely ignored the sole factor that led to the decrease in sales. Now, personally, I've been an auditor for the Franchise Tax Board for 28 years. And the first thing we do as auditors when screening or scoping a potential unreported income issue is to look at the economic reality of the issue, the time period, and the taxpayer's overall situation at the time. And if that tax return does not pass the economic reality test, we do not waste the state's resources and select the return for further examination. This clearly has not been done here, and the department has failed to consider the economic reality of the audit time period and the resulting effect on not only on the taxpayer sales from his business, but also on his personal life. Now, almost 9 years and hundreds of hours later, we find ourselves here.
Ms. Lindo,
Yes.
this is Judge Rosas. My apologies for the interruption. You've passed the 3-minute mark. If you want, we could just reserve the rest of your statement and argument for when we allow you time for argument after your witness's testimony.
Judge Rosas, that will be fine. Thank you.
So Judge Rosas, thank you, Ms. Lindo. Let me turn it over to Ms. Jimenez for Cdtfa's opening statement.
Judge Rosas, this is Mary Flor Jimenez. Thank you for the opportunity, but the department is waiving our opening statement.
This is Judge Rosas. Thank you, Ms. Jimenez. In that case, at this moment, we're going to call Mr. Wilton Everton Distin as a witness. Mr. Distin, if you would please raise your right hand. Mr. Distin, do you swear or affirm that the testimony you are about to give in the matter now pending before the Office of Tax Appeals shall be the truth, the whole truth, and nothing but the truth?
Yes, I do.
Thank you, Mr. Distin. Ms. Lindo, as your witness, we discussed the 3 options for Mr. Distin to testify. It's your witness, so I'll allow you to discuss with him how he should proceed with his testimony.
This is Pamela Lindo. Judge Rosas, the taxpayer will just read a narrative for his testimony.
This is Judge Rosas. Thank you, Ms. Lindo. Mr. Distin, you may begin whenever you're ready, sir. Thank you.
It's unmuted.
Well, hello, good afternoon, everyone. My name is Wilton Distin, the owner of Hungry Joe's Burgers. I'm just here to lay out the truth of what happened throughout those 3 years. And bear with me, the accent and all of that. Considering the fact that I'm not a lawyer, an accountant, no experience in these fields, it takes a lot of courage to be here today. But I'm here to lay the truth and nothing but the truth. I operate a restaurant in Jamaica for a few years before moving to the US. With little or no knowledge, I decided to conduct business here. I decided to get back in the restaurant business. Hungry Joe's Burger was established in June of 2000. Started out as a burger joint. First day's sale was $50 and change. From there, it grew steadily to an average of 5,000 plus today, currently. From the point of inception, I have been working 14 hours per day, 6 days per week. I'm the cook, the bookkeeper, and the manager. A few years in, I introduced the Jamaican food. Example, oxtail, curry goat, jerk chicken, fish, costly items. which will be, no doubt boost the sale with little profit. Reason for that, it's a poor neighborhood and the competition also impact the business. Late 2007 through 2008, I noticed sales were declining and got worse into 2011. Many businesses all over the country start feeling the impact of the recession and was forced to close. The strip mall that I occupied housed 5 tenants, and I was the only tenant. I was the only tenant that was left on the property who was not closed at that point. There are some of the restaurants that went under that I could name, including Cody's Jamaican, Larry's Jamaican, Kingfish, Peak of Fish #2, Crab Pit, Golden Bird. These are just in my area. However, I got to the point where my electricity was turned off twice, my gas once, maybe or twice, becoming too much to bear. Mid-July of 2011, I made a call to my landlord, telling him that I will have to close. Surprisingly, he actually begged me to stay. The reason for that, I was the only tenant there and he didn't want the place to be empty. Stating that he was stating that I'll not have to pay rent unless I'm able to. Also, I can make partial payments. That was huge to me. I also met with 2 vendors who have been doing business over the years, namely Sinclair's Trading, Island Boy Products, and they themselves needed to stay in business, so they offer goods and consignment. That is how I was able to keep the door open throughout 2011. Where the gas and electricity is concerned, I have to make a deposit of $600 to electric and $1,300 to the gas company in order to keep service on because of so many late payments of the sort. Late January, early February, I received a letter from the state board at the time, now Cdtfa, stating I'm being audited. I was told to provide Z-tape, purchase receipt, and I did. Audit period was from 2009, 2010, 2011. After the audit came back, the auditor came back with her findings. She determined that I owed $45,000, of which I will only have to pay 30. She went on to explain that after conducting the audit, she determined that 209 was good. That brought the amount down to 32,000. So apparently that would be for 2010, 2011. She said if I agree, I should sign. If not, then I don't have to sign, which I didn't. I was in shock. I know that finding was impossible, after which things even got worse. I'm sure Pamela will get into more detail as to their findings and her finding. The recession has brought horror to me in many ways. I lost my home, my rental properties. The only thing I have left was a small takeout restaurant, which was saved by the landlord and the 2 vendors. To get rid of debt and obtain a fresh start, I had to file bankruptcy in 2011. With all this happening throughout the period, Cdtfa claimed I underreport 1.7 million in sales. Or was it 7? With all due respect, these were just hypothetical numbers that were generated and used in their findings. In some cases, it may come close to the truth, but in this case, they are wrong. All of this info I provided is the truth, which gives me the strength to fight to the end, hoping that someone with no bias will look at the evidence, hear the argument, and make a decision. In this case, it's 3 judges. I want to thank you.
Thank you, Mr. Distin. At this point, I'm going to turn it over to Ms. Jimenez or anyone else from Cdtfa. Do you have any questions for Mr. Distin?
Judge Rosas, this is Mary Flor Jimenez. The department has no questions for the witness.
So Judge Rosas, thank you, Ms. Jimenez. At this point, I'm going to ask my co-panelists whether any of them have any clarifying questions for the witness. Judge Cho, do you have any questions for the witness?
This is Judge Cho. I have no question. Thank you.
This is Judge Rosas. Judge Tay, do you have any questions for the witness? Judge Tay, I was not able to hear anything that you just said. If you can please repeat that. Thank you. Judge Tay, this is Judge Rosas. We're not able to hear you, and I see Ms. Alonso shaking her head. I'll tell you what, Judge Tay, if you have any questions, can you give me a thumbs up? And if you have no questions, a thumbs down? I see a thumbs down. In that case, we will move forward. Mr. Distin, I just wanted to say, I have no questions, but you did make a statement about how difficult this is for you. I realize this is difficult, and I just wanted to thank you for taking the time to express yourself and to provide your testimony. We really appreciate it. Thank you, sir. At this point, we have no more questions for this witness. Thank you, Mr. Distin. We are going to turn it over to Ms. Lindo. Ms. Lindo, whenever you're ready, as Mr. Distin's representative, you can present your presentation whenever you're ready.
Okay. This is Ms. Lindo. Thank you, Judge Rosas. I'll continue. I'd like to start off by giving the court the big picture of the issue at hand. Since inception, the taxpayer sales had been growing steadily. Then the Great Recession and the slow recovery period right after the Great Recession hit, and the taxpayers' growth in sales and year-to-year sales decreased. Then, when the recession ended, the taxpayer sales resumed its steady growth. My supplemental opening brief, my exhibit 42 at the bottom of page 150, top of page 151, shows the history of the taxpayer sales from 2007 to 2018 and the reasons for the increases and decreases. And if you'll take a look, you'll see that the only time that the taxpayer sales decreased was during the recessionary periods of 2009 to 2011, the years under audit. This therefore should be no reason for an audit, and there should be no big mystery here. However, after all the supporting documents provided to the department, not once, either through work papers, correspondence, meetings, or conferences, have they acknowledged the possibility that the decrease in sales could have been caused by the recession. Instead, the evidence shows that the department made several statements saying or insinuating that the economy was good during this period. To give you a time, the time period of the recession, if you look at Exhibit 13, page 64, the article, The Great Recession and Its Aftermath, by John Weinberg of the Federal Reserve Bank of Richmond, written in November 2013. In the middle of the page, 64 says, in December 2009, the US economy entered a recession. Further down, it says, in the fall of 2008, it was large enough to be labeled the Great Recession. The US economy bottomed out in the middle of 2009. However, the recovery in the years immediately following was unusually slow. And if you turn to page 66 of that same article, under the effects of the broader economy, it says December 2007 is when the month the National Bureau of Economic Research, NBER, who are the official authority of the U.S. recession, recognized as the beginning of the recession. The decline in overall economic activity was modest and at first, but it steepened sharply in the fall of 2008. The next page, 67, reads, the recession ended in June 2009, but economic weakness persisted. Economic growth was only modest, averaging about 2% in the first 4 years of recovery. So that would be from June 2009 through June 2013. And the unemployment rate remained at historically elevated levels. In another article, my exhibit, page 70, the recession of 2007 through 2009, written by the U.S. Bureau of Labor Statistics. The article, written in February 2012, discusses unemployment. It states many of the statistics that describe the U.S. economy have yet to return to pre-recession values. In the middle of the page, under unemployment, it reads, one of the widely recognized indicators of a recession is higher unemployment rates. In December 2007, the national unemployment rate was 5%, and it had been at or below that rate for the previous 30 months. At the end of the recession in June 2009, it was 9.5%. In the months after the recession, the unemployment rate peaked at 10%. So both articles refer to the recession and the resulting financial crisis immediately following the recession as two separate events. So based on these articles, when we are talking about the time period of the recession, we have to keep this in mind, that the official time period determined by the NBER was from December 2007 through June 2009. However, the recovery period lasted beyond that period. Now that is important to keep in mind, because as you will see, the department is saying that the recession was over after 2009. The department was saying that the recession was over after 2009. So there was no reason for sales to decrease so drastically in 2010 and 2011. When you go back to the taxpayer sales, exhibit 42, page 150. Gosh, sorry. Exhibit 42, page 150, you'll see that in 2008, the recession started taking effect, and the taxpayers' growth in sale compared to 2007 was small. However, between 2008 and 2009, sales declined. Now, as the article reads, although the NBER considered the recession ended in June 2009, the recovery in the years immediately following were unusually slow. So this is reflected in the taxpayer sales in 2010 and 2011 with the sharp declines. The evidence shows that the department apparently had no knowledge of the effects the recession had on a small takeout restaurant such as Hungry Joe's, which was located in a small, low-income area. Did he disappear? And which, because of higher unemployment rates and the housing crisis, are typically hit harder than other neighborhoods during a recession. During the appeals conference that was held in September 25th, 2018, the audit principal, Albert Lay, who was the acting supervisor at the time, actually stated that the economy has nothing to do with the taxpayer sales. In the department's Exhibit A, 156, page 156, Mr. Lay's post-conference submission in discussing the reason for the increase in sales from 2011 to 2012. In the last paragraph, 6 lines down, Mr. Lay alleges that this sudden and large increase in reported total sales is not a coincidence or due to the economy recovery, but was triggered by the knowledge of being audited. He goes on to state at the very bottom of the page that the reverse trend in the petitioner's recorded data is unreasonable and can only be explained by the reason the petitioner recorded and reported more cash after they knew they were being audited. So this speaks to the mindset of the department and why none of the supporting documents that we presented was given any credibility. They are basically accusing the taxpayer of not reporting all of his cash sales during 2009 and 2011. And the only reason he began reporting it in 2012 is because he was contacted for audit. So his sales didn't increase in 2012 because the economy had entered into that post-recession period. The sales increased only because he was contacted for audit. The taxpayer not only finds that offensive, but it is absolutely untrue. The taxpayer's history of sales refutes Mr. Lay's claim. Going back to my exhibit 42, page 150, in my supplemental opening brief, the data shows that the taxpayer's sales in 2012 were $335,426 compared to $209,000 in 2011. The taxpayer's average sales between 2007 and 2009 before any audit notification was $350,270. The sales reported in 2012 and 2013, which are, again, post-recession periods, $335,426 and $384,654, respectively, are right in line with the average sales before the recession. So following Mr. Lay's logic, if the only reason the taxpayer was, if the only reason for the increase in sales in 2012 was because of the taxpayer's knowledge of the audit, what was the reason for the almost identical sales reported in 2007 and through 2009, keeping in mind that this was his very first audit? If he was hiding cash sales in 2009 and through 2011, why wouldn't he have been hiding these sales in 2007 and 2008 also? Analyzing Mr. Lay's claim even further, if you look at my exhibit 19, starting on page 78, which is the historical data of the taxpayer's quarterly sales, you'll see on page 80 that in the fourth quarter of 2011, the taxpayer reported total sales, it's the last column to the right, $13,458,000 and $15,573 and $15,050 for October, November, and December, respectively. For the following month, January, the first month of the first quarter of 2012, on the page 81, it shows that he reported $16,213, which is just a slight increase from the previous month, $15,050. Now, sales tax payments for each month are due on the 24th of the following month. So the taxpayer's January 2012 payment would have been due on February 24th, 2012, which was after he knew about the audit. So following Mr. Lay's logic, if the only reason the taxpayer's increase in sales between 2011 and 2012 was the fact that he was contacted for audit, the taxpayer's increase between December 2011 and January 2012 would have been significantly higher. Instead, between December 2011 and January 2012, the increase was only $1,163. You'll see that for 2012, sales each month continued to increase as the recovery continued to pick up. For the first quarter of 2012, you see sales was $76,710. If you turn to page 78, you'll see, keeping the $76,000 amount in mind, you'll see that this amount matches almost exactly to the quarterly amounts reported in the last two quarters of 2008, which was $76,311 in the third quarter and $75,398 in the fourth. Now, staying on this page, if you remember in the article, The Great Recession and its Aftermath, the NBER stated that although the US economy entered into a recession in December 2009, it was not until the fall of 2008, which is made up of months in the third and the fourth quarters, that it was large enough to be labeled a Great Recession. The article says that the decline in overall economic activity was modest at first, but it steepened sharply in the fall of 2008. This exact point is reflected here in the taxpayer sales records. In the first 2 quarters of 2008, sales were $105,627, as you can see on this same page 78, and $107,049. Although the recession had officially begun, it did not begin to take effect until the 3rd quarter. Also, going back to Mr. Lay's claim, if the taxpayer was hiding sales up until the point that he was contacted for audit in 2012, why did he report such large sales in the beginning of 2008? Page 81 shows that he didn't make close to this amount again until the 3rd quarter of 2013, when he made $103,287. Mr. Lay's post-conference letter is addressed to Cindy Feng, the appeals conference auditor. And even though during the conference I presented all the supporting documents showing how the recession affected the taxpayer's business, following Mr. Lay's reasoning and statements made during the conference, in her appeals decision, which is my exhibit 21, page 94, the beginning of the 3rd paragraph, Mrs. Feng reiterates Mr. Lay's comments during the conference that, quote, although the economy in 2010 and 2011 was slow, it was good in 2009. Again, what is this based on? What research was done? Not only does the research show that we were still in the middle of a recession in 2009, but it is common knowledge that the economy was bad in 2009. Mrs. Feng disregarded all of the supporting documents that I presented and relied on this inaccurate finding to conclude that no further adjustments are warranted. The auditors and the reviewers handling this case also did not acknowledge the effect of the recession on the taxpayer's business. In my exhibit 36, page 139, the auditor's work papers, after calculating gross sales markup in the mid 40% range in 2009 through 2011, she stated the markup is unrealistically low for this type of business, and that further investigation was warranted. She then recalculated the markup and got a much higher percentage in order to determine unreported sales. What type of business is she referring to when she says unrealistically low? The markup is unrealistically low. What type of restaurants was she comparing the taxpayer's restaurant to? It would be reasonable to assume that before making such an assumption and making a determination based on that assumption, that specific research and analysis should have been conducted. The data used in that analysis should be as specific as possible and as comparative as possible to the taxpayer's business. In order to make an accurate determination, a comparison of the markups of similar restaurants in the same vicinity of Hungry Joe's, preferably Jamaican restaurants, which, since they are so unique, should have been conducted. The vicinity of the restaurant used in the comparison should be Inglewood or a similar low-income neighborhood with the majority of the customers being Black or Hispanic, as is the case at Hungry Joe's. And also during the same recessionary period, when alleging unreported income, the burden of proof is on the department. Therefore, when they ignore the taxpayer's actual books and records and determine income based on other accounting methods and hypothetical data, the data should be as sound as possible. The records show that no such comparison was made by the department and that the methods used to determine unreported income were flawed. A broad statement like the markup is unrealistically low for this type of business without specific data to support it should be given no credibility. Now, the only clue that I was able to use to figure out what research the department is using to determine an inappropriate markup was from the auditor's work papers, my exhibit 35, page 138. In her comments, she said she recalculated the markup with the audited taxable sales for 2010 and 2011. They were 108.90% and 126.37% respectively. Audited taxable sales were calculated based on a 3-day observation test. Then she said the markup was within the industry average. Again, what is the industry average? There's no cite to what information she's relying on. Going back to the article, My Exhibit 14, page 70. The article, and I want to also stop here and say that they obviously had no idea of a markup in this type of restaurant. You'll see on exhibit, and the markup is low based on the customers, based on the neighborhood, based on the demographics. I mean, he's not in business to make millions. He was just, coming from Jamaica. All he knew how to do was to cook. So this is what he knew how to do. He just wanted to survive. So his markup can't be sky high because he wouldn't have any customers in that neighborhood. So that should really be taken into consideration. Exhibit 38, My Exhibit 38. Exhibit 38. So there, I'll have to go back to that. But I was just giving you an example of them not really knowing the price of items. Oh, actually, it's exhibit, it's actually page 144. At the bottom, it shows that the price of fish was $6.99 per pound. And the fish that they use at Hungry Joe's is the best fish. It's Jamaicans pride themselves on the best. So it has to be red snapper. So the review had mentioned that the cost of the fish that was used in the shelf test was too high, $6.99 per pound. The auditor called the business, that Moy Market, and verified that yes, it was actually $6.99 per pound. And then when you look at the menu, on page 140, you'll see that he can only sell that because of the neighborhood. He can only sell that fish for $15. So the markup cannot be high. And Jamaican food, the cost of Jamaican food, because of the seasonings, oxtail, goat meat, it's not chicken and it's not burgers. So the markup, keep that in mind when we're talking about markup. Going back to the article, Exhibit 14, page 70, the article discusses how unemployment rates for Blacks and Hispanics in California was higher than any other race and most other states. This information is critical when imputing income. As My Exhibit 4, starting on page shows, the majority of the Jamaican restaurants in the 5-mile radius of Hungry Joe's went out of business during the recession. Also, a lot of the takeout restaurants, similar restaurants to Hungry Joe's, they all, just like the taxpayer mentioned, they all went out of business. And my exhibit shows all the Jamaican restaurants that went out of business during that time and right after that time because they just couldn't survive. What is a typical markup of a business right before it goes out of business? I'd like to add here that not only is Hungry Joe's located in a low-income neighborhood, it is also located in a crime-ridden neighborhood where there's a bulletproof glass between the cashiers and the customers. In April of 2018, 2 customers were killed there. And if you Google Hungry Joe's right now, that is one of the first stories that you'll pull up. Just earlier this year, the tenant right behind Hungry Joe's, which is what, a couple of feet, was killed right there. The tenant, that place is still empty. Just a few months ago, they broke into the place, Hungry Joe's. They broke in stupidly looking for cash, and they stole the point of system register. All that is police report was done and everything. But this should all be taken into consideration when looking at markup percentages. In considering a price point, the taxpayer has to take into consideration, like I said, the demographics of the location and his customers. What price would they be willing to pay for his food? And the answer to this question is a reason for the low markup. The article, Exhibit 15, starting on page 73 at the top, The Great Recession, 2008 to 2009, A California Perspective, written by William Small of the law firm Blank Rome LLP of Los Angeles, written in March 2010, states that the US and California economies continue to struggle in the wake of the worst economic recession since the Great Depression. California has been particularly hit hard with higher unemployment than the national average and the collapse of the housing market. It states that the current unemployment rate in California is about 12.4%, representing a twofold increase in the state's unemployment rate during the 2-year period since January 2008. This compares to the average national unemployment rate of 10%. So like I said, you have to get as specific as possible to where the taxpayer is located when you're throwing out these percentages. Hungry Joe's is located in Los Angeles County, so it's necessary to determine the effect that the recession had in his county. In the article, My Exhibit 45, which starts on page 168, Housing and Health in Los Angeles County, The Social Detriments of Health, written by the Los Angeles County Department of Public Health in February 2015, it states on page 170 that California was one of the states most severely impacted by the economic recession. It states that between 2007 and 2011, incomes declined for all but the highest paid earners in the county. Low-income households suffered the most, with the earnings for the poorest fifth of county residents declining 12% between 2007 and 2011. The most harmed by job loss were largely communities of color. Historically disadvantaged groups experienced a disproportionate deterioration in economic conditions during the recession. To make matters worse, Southern California has recovered from the recession more slowly than other parts of the state. So even though this article was written in 2015, it states that the drastic declines in Los Angeles County's residents' incomes lasted through 2011. And this would offer another good explanation for the overall decrease in sales beginning in 2012. Also, the article explains that the evidence shows that financial institutions specifically targeted African American and Latino families for predatory, deceptive lending practices and subprime loans. If you remember, that was the reason, that was the beginning of the reason for the recession. So during the audit period, not only was the demography of Hungry Joe's customers being affected by disproportionate levels of high unemployment, a lot of them, including the taxpayer, were also losing their homes. During the audit, the taxpayer did not have a sophisticated bookkeeping system. Not only was he the head chef of Hungry Joe's, he was the bookkeeping system. The bookkeeping merely consisted of sales, which he recorded. Judge Rosas, can I show you the sales journal on the screen?
Sorry, I was muted, my apologies. Ms. Lindo, does it contain any private identifying information for Mr. Lindo? I'm sorry, for Mr. Distin?
No private information. Just want to give you an idea of the actual sales journal and what it looks like and what he relied on to pay his taxes.
Is this an exhibit that's already been provided to OTA and to Cdtfa?
Judge Rosas, if you remember, I sent, because of the way the copies turned out, and I wanted the department to have a clear, legible copy, I sent the original to the department. And I did not make a copy for myself. So if you remember, we discussed this and the department was going to look for that, but it has not been provided. So what I have as my Exhibit 1 are actually just what it looks like, but these amounts are from 2008. So you can look at Exhibit 1. I just wanted to show you the actual ledger.
I understand. Ms. Jimenez, do you have any objection to Ms. Lindo displaying Exhibit 1 on the screen?
Judge Rosas, I'm not really sure what she's trying to show. Is this part of the Exhibit 1? Because I know Exhibit 1 is out of the audit period, which is 2008. Is this 2009 or 2010? Is it within the audit period?
This is Judge Rosas. Ms. Lindo, can you address, you're referring to Exhibit 1, correct?
I'm referring to Exhibit 1. However, as I explained, the entire 2009 through 2011 sales journal was mailed to the department. And the department was supposed to look for that so I can include, I did not make a copy. I sent the original. So I don't have the original in my possession. So the only reason why I used 2008 as an exhibit is to show you what his sales journals look like, because I don't have the actual years.
This is Judge Rosas. Ms. Lindo, thank you for that explanation. Considering Exhibit 1 has already been admitted into evidence, please go ahead and you may show Exhibit 1 on the screen, the copy that you have with you.
This is his sales journal. Like I said, he would at the end of each day, he would write the daily sales. So like I said, he was doing all the bookkeeping after a hard day's work. You'll see that each day he would report the sales for the day based on the Z tape. Then he would add those up to get the weekly sales, add those up to get the monthly sales. He would then apply the sales tax rate and pay his monthly taxes. At the end of each quarter, he would use this information to file his quarterly returns. For the purchases, he would gather up all of his purchase receipts and purchase invoices and record the monthly totals. And this would be his purchases journal. At the end of the year, he would then give this information to his tax preparer, who would then prepare his personal tax returns, which included his Schedule C business. For the audit, the taxpayer's tax preparer at the time, Mr. Nuizi Nwashuku of Accurate Bookkeeping, represented the taxpayer. And as I mentioned earlier, this was the taxpayer's first audit. So this was a very unfamiliar experience for the taxpayer. But he had no reason to believe that he wouldn't be represented well during the audit. And therefore, he relied on his tax preparer to do just that. However, based on my review of the correspondence between the previous representative and the audit staff, I determined that the previous tax preparer did not do a good job representing the taxpayer, and pretty much left him to fend for himself without adequate knowledge of bookkeeping, the accounting, the audit process, and most importantly, the adverse effects that an inaccurate audit finding would have on him. Some of the examples of bad representation: although the representative provided 3 years worth of Z tapes to the auditor, he did not provide the sales journal. It is not
Ms. Lindo.
clear. Yes.
This is Judge Rosas. My apologies for the interruption. Just a friendly reminder, you have approximately 15 minutes left to wrap up your presentation.
Okay. So basically, what I'm saying is that he did not represent the taxpayer well. The representative should have accompanied the taxpayer to each of these meetings, and he did not. Ultimately, what he did was he filed the petition for redetermination. He filed it 2 days late, which resulted in the filing of an untimely protest, which before I stepped in, since the department was not allowing it as an administrative protest, this would have been the end of the taxpayer's business and livelihood. And I just wanted to mention that the taxpayer was offered several times, as he mentioned, he was offered certain amounts. First, it was $45,000 he was offered, and then he was offered $30,000. However, because $30,000 in unreported sales. However, because he knew that he reported the correct amount of tax, he did not accept this offer. In my exhibit 17, page 76, shows the auditor's work papers when she offered $30,000. It states, based on the 3-day observation test, the 2009 sales were accepted as reported, and the auditor reduced the unreported sales to $292,879. However, he did not accept it. Okay, so on May 31st, 2013, the auditor's tax the auditor's work papers, which is the department's Exhibit A, page 28, shows that a markup percentage of 314% was applied to increase the percentage of error from 53,028, 135,057%, and 126% to 244%, 235%, and 222% for 2009 through 2011. And if you look at page 16 of the same exhibit, the state's exhibit, you'll see that this has now resulted in unreported sales of $1.7 million. So the department is now saying that the taxpayer made $2.5 million for the 3 years period. More specifically, the department is now saying during the Great Recession period, the taxpayer made sales of $1,117,339 in 2009, $756,844 in 2010, and $659,284 in 2011. All while all the other Jamaican restaurants and other similar restaurants were going out of business, and he was the only one left in his strip mall. Now, because of the statute of limitation was about to expire, this is the amount that stuck, and this is the amount that the notice of determination was based on. This was when the prior representative filed the petition of determination late. On November 2nd, 2013, the department sent the taxpayer and his prior representative a letter, if you see Exhibit A, page 173, stating that because the petition was not filed timely, it will not be accepted as an administrative protest, and that his only recourse to appeal the matter would be to pay the liability in full and then file a claim of refund. Now, if you go to Exhibit A, page, the state's Exhibit A, page 1, you'll see that that total liability on that $1.7 million is $231,837. Okay, and this is where I got involved. So they were saying that he made $1,117,000 in 2009 during the middle of the recession, and you'll see, if you look at my Exhibit 42, page 151, you'll see that the taxpayer didn't make $1 million, barely $1 million in sales until 2018, just 2 years ago. This was when the economy had completely recovered from the recession and was doing very well. By then, the taxpayer had made many improvements to his business. Like he said, first day of business, he made $50. Today, he's $50 a day. Today, he's making $5,000 in one day. And Hungry Joe's is known for having a line out the door, so business is booming. He implemented a computerized point of sale system. He has a huge following on social media, 4,000 followers on Facebook, where he does all his advertising, and he has a great Yelp and Google rating. This is a stark contrast from 2009. So after realizing the grave predicament that the taxpayer was in, I arranged an immediate meeting with the auditor and her supervisor, Mr. Fred Duenas, on December 16th, 2013. Now, the department's Exhibit 12, Exhibit A, page 112, the auditor's assignment history, December 16, 2013 entry, at the top of the page, it says that the taxpayer and myself met with the auditor and her supervisor to request to accept the late petition. Because I knew how untimely protests were handled at the Franchise Tax Board, I knew that, or thought that this would be a good candidate for an administrative protest. I requested that the case be accepted as one. But during the meeting, Mr. Duenas said that he would accept it as an administrative protest. However, that he would not put it in writing. And being a veteran auditor, I thought this comment was odd to not put it in writing. However, I continued with our meeting. I provided the books and records showing everything that I discussed. I provided the taxpayer's 2009 home foreclosure documents, my Exhibit 5, page 17. He also had 3 properties in Atlanta, Georgia that were foreclosed on in 2009. I provided that into my Exhibit 16. I'm sure if he had $1.7 million in extra income, he would have used some of that to save his home and to save his rental properties. Instead, he was living in a small apartment. I provided on Exhibit 8 just some of the utility bill notification and disconnection letters he was receiving. Like I said, he got his electricity and gas turned off a couple of times. And I provided a lot of other documents, but I'm running out of time. But one document, he was receiving so many non-sufficient fund notifications. That's my Exhibit 7. And if you take a look at page 41, for example, you see that in one day, he was charged 3 NSF fees for items as small as $1.75. So this is just an indication of the desperate situation that he was in. Certainly, if he had any extra money, he would have prevented that from happening. Okay, and then he filed bankruptcy in 2011. And I provided those documents in my Exhibit 6. During the same period as the bankruptcy, when he could no longer afford to pay his rent at the business location, he decided to walk away. My Exhibit 3 shows the letter that the landlord wrote, telling him what happened in that period, telling him not to walk away, to just hang in there for a few more months. He was an accountant, so he knew that the economy was about to recover. So he begged the taxpayer to stay, and he agreed to allow him to pay him piecemeal. After this meeting, Mr. Duenas informed me that he would not accept the case as an administrative protest. And again, what this means is that the only way the taxpayer could appeal was to pay the $231,000. I had to get the State Board Advocate Office involved, and because I know the experience with the Franchise Tax Board, and my letter, page Exhibit 23, if you look 5th paragraph down, you'll see that I'm requesting that the department accept the petition for redetermination as timely. Now, that was what my exhibit was, which you allowed. I think it's my Exhibit 47. It just shows a string of emails between Diana Tay and Fred Dumas asking him what happened, and him admitting that he did tell me that he would accept it as an administrative protest, but he didn't put it in writing. But thank God, after Diana Tay got permission from the higher ups, I'm assuming Bruce Morgan, I think his name is, she told me that yes, she would allow it as a administrative protest and that he could continue to protest.
This is Judge Rosas and Ms. Lindo. Just a reminder, you're down to your final 5 minutes, so you can wrap up your closing argument.
I'd like to wrap up by...
You will have additional time on rebuttal afterwards.
According to Revenue and Taxation Code 6481, if the board is not satisfied with the tax returns or the amount required, they can use other methods. Okay. However, if you look at, where is it? Payne versus the State Board of Equalization, and my site is in my work papers. It basically says that the department cannot use a test period, data from a test period, and apply it to an audit period if the conduct is not substantially similar in both periods. Okay, so what is based on, the adjustment is based on the shelf test, which was using data from 2013, and the final determination is based on a 3-day observation test that was using data for 2012. 2012 and 2013 are periods that are not substantially similar to the audit period. And according to Payne versus Board of Equalization, that should not be allowed. And that's exactly what they're doing. And if you, the department did a thorough analysis of the books and records, that is the Z-tapes and the sales journal for 2011. This analysis is included in the department's Exhibit 1. Pages 235 through 238 show the previous representative's schedule of all the Z-tapes for the year. The previous representative did not have the sales journals to compare these Z-tapes. For the missing tapes, he would assign an average for the day. in my review of those averages, they seemed overstated based on the typical day. The total sales labeled quarter totals was $210,244 for the total year of 2011. This compares to the total sales labeled B of V quarter taxes filed of 209,000. So the representative is saying that when he added everything up and applied the averages, he got 210,000, but what the taxpayer actually reported was 209,000. But like I said, the representative applied averages for missing Z tapes. So this amount would be including taxes. Pages 240 through 248 is the department's analysis of the Z tapes compared to the sales journal. Because now, like I said, I provided the sales journal. Because the department did not apply an average for the missing Z tapes, the total amount they came up with was $158,000. The total per the sales journal, however, was $205,212, including taxes. Again, the taxpayer reported $209,572, which is $4,000 more than what and the reason why it was $4,000 more is because there was 7 days out of the whole year that he had missing journal entry, and 6 of those days was in February where he was out, and I think he was sick, and he didn't report the sales. So if we use this, we'll see that the taxpayer over-reported. So based on everything that I've said, if you apply the law to the facts and the circumstances presented, you will see that the taxpayer in no way owes this ridiculous amount of money. And I believe that both the unreported sales amount and the finality penalty should be withdrawn.
Thank you, Ms. Lindo, for your presentation. At this point, I'm going to turn it over to my co-panelists to see if any of them have any questions for you, starting with Judge Cho.
This is Judge Cho. I don't have any questions at this point, but I might have questions after the department's presentation. Thank you.
This is Judge Rosas. How about Judge Tay? Any questions? Judge Tay, looks like we're still having a difficult time hearing you. Let's use the same method that worked before. Thumbs up if you have questions, thumbs down if you do not. See a thumbs down, no questions. I just have one clarifying question, Ms. Lindo, before we turn it over to the department for their presentation. Towards the end, you made a reference of that the taxpayer over-reported sales. Can you point me to your exhibits? Are there any exhibits where you outline what you believe were the correct amount of sales during the audit period?
The correct amount of sales?
I understand your position. You're disagreeing with the audit and what they determined were unreported taxable sales, but I'm trying to make sure that I'm not overlooking any of your exhibits. Is there anything in the exhibits that outlines what you believe were the correct amount of sales that your client made during each quarter during that audit period?
Yes. I believe that the sales journals that I provided, that, like I said, the department was unable to find, and I did not keep a copy. If you look at the state exhibit I, you'll see, starting on page 240, you'll see that the department, for the entire 2011, they made mention of every single day that the taxpayer wrote in his journal. They have every single day in taxable sales per handwritten sales. And then they compare this amount to the taxable sales per the Z tapes. The taxable sales per the handwritten journal, as you can see on page 248, the total based on the sales journal was $205,212. again, what the tax, because there was a few missing days, like I said, there was only 6 missing entries for the whole entire year. I mean, seven missing entries for the whole entire year, and 6 of those in February where he was out, where he had to apply an average, and he overstated just to be on the safe side. So that is why he actually reported 209,000 compared to this 205,000. I believe this exhibit shows that this is a correct amount. He actually overpaid. And if you apply that to, this is only 1 year, you apply that to all 3 years, the taxpayer owes no additional money.
Thank you, Ms. Lindo. One final question, and mostly is to make sure that I understand the essence of your argument. So generally, when there's a notice of determination based on allegations of unreported sales, Cdtfa has the initial burden. It's a minimal initial burden to show that its determination was reasonable and rational. So if I'm understanding the essence of your argument, you're saying that Cdtfa's determination was not reasonable and was not rational because their markup assessment did not take certain factors into consideration, such as the makeup of Inglewood and the ethnic makeup of the customers, correct? You're basically saying that they were comparing apples to oranges, and that's why their determination was not reasonable and rational. Am I understanding your argument correctly?
Judge Rosas, you are partially understanding it. What I am saying specifically is the Cdtfa did not take the reason why the taxpayer sales decreased, the reason being the Great Recession. They did not take that into consideration. If that were the case, they would not take a test period, which was not in the same, it was not, as they say, the conditions were not similar to the audit period. They would not take data from the test period and apply it to the audit period. And as I said, that site would be Payne versus Board of Equalization. They did not take anything in scripture. They did not take the markup into consideration. There was a lot of things, but the jarring thing is the Great Recession. And as I said, the historical data shows that the only time the taxpayer sales decreased was these 3 years. And then the sales went back up again. Sales were up before the recession, sales was down after the recession. So that has to be the only reason why sales went down. And I believe that even though his books and records weren't perfect, because like I said, he was the bookkeeping, I think he made a huge attempt to pay the correct amount of tax. This exhibit I alone shows that he made an attempt. He only missed 7 days. And based on this, and there should be no reason not to believe that this is not correct. Based on this, he actually over-reported sales just to be on the safe side.
This is Judge Rosas. Thank you, Ms. Lindo, for that clarification. I appreciate it. Before turning it over to Cdtfa, just a few matters regarding exhibits. As I mentioned, there are 2 exhibits that I was going to reconsider my ruling if necessary. Exhibit F was not admitted into evidence, and that ruling stands. OTA is not going to admit Exhibit F into evidence. However, Exhibit J, which was not previously admitted into evidence, I'm going to reconsider. You mentioned during your presentation various articles regarding the Great Recession that are part of your presentation. I think it's only fair to also allow Exhibit J, which is also another article regarding the Great Recession, just to have an article and evidence from Cdtfa. So at this point, I've reconsidered my initial ruling, and I am going to allow Exhibit J to come into evidence, but Exhibit F is not coming in. So with that said, at this point, I am going to turn it over to Cdtfa. Ms. Jimenez, whenever you're ready, you may begin your presentation.
Thank you, Judge Rosas. This is Mary Flor Jimenez. Appellant was a sole proprietor who operated a quick service restaurant serving American and Jamaican style dishes. The facility was more of a carry-out, pick-up to go type of place with very limited sitting. The restaurant is located in a residential area in Inglewood, California. It operated from June 1st, 2000 through September 31st, 2017. On October 1st, 2017, Appellant incorporated and transferred the business to the corporation. Now, the liability period is from January 1st, 2009 through December 31st, 2011. Appellant provided federal income tax returns for 2009 through 2011, a sales summary and a purchase summary for 2011 only, and some cash register Z-tapes and bank statements. The department compared taxable sales reported on the sales and use tax return with cost of goods sold claim on the federal income tax return. The computed book markups are 43.66% for 2009, 44.52% for 2010, and 48.89% for 2011. The overall markup is 46.58% for the 3 years combined, and that would be on your Exhibit A, page 37. Now, these book markups are considered very low for a limited service restaurant. For this type of business, we would expect a markup of over 150%. The federal income tax return also reflect a net loss of around $11,600 for 2009, a net loss of $13,000 for 2010, and another net loss of $36,000 for 2011. This information is on your Exhibit A, page 38. On that same page, the total wages claim are around $27,000 for 2009, $19,000 for 2010, and $19,000 for 2011. Now, the department also noted that the purchases recorded in the 2011 purchase summary totaled around $175,000. This exceeds the amount claimed in the 2011 federal income tax return by around $38,000. Using the reported taxable sales for 2011 and the purchases from the 2011 purchase summary, the department computed a lower book markup of less than 17% for 2011. That calculation is on your Exhibit A, page 40. Now, this is lower than the markup expected for this type of business. And if that additional $38,000 is added back to the cost of goods sold on the federal income tax return, the net loss for 2011 is actually $74,000. And this is with wages of less than $19,000 for 6 employees with no claim rent payments. The department rejected reported taxable sales due to the lack of reliable records, the substantial net loss for all 3 years, and the unreasonably low book markups. Initially, a 1-day observation test was performed on Thursday, May 31st, 2012. It was later expanded to include 2 additional days, Tuesday, October 2nd, 2012, and Saturday, October 13th, 2012. The data from these 3-day observation tests can be found on your Exhibit A1, page 148. Now, the department counted 305 business days per year, considering the Sunday closure and an additional 8 days for holidays. The average daily sales of 1,600 is multiplied by 305 days for the year, and then multiplied by 3 years to compute taxable sales of $1,483,000 for the audit period. The computed taxable sales are then compared to reported taxable sales of around $755,000. This is to establish unreported sales of around $720,000 for the audit period. This will be on your Exhibit A, page 145. The department sent an audit engagement letter to appellant on January 17, 2012, and followed it up with a phone call on February 2nd, 2012. Appellant's reported taxable sales went up from $44,000 for fourth quarter 2011 to $77,000 for first quarter of 2012. This is a sudden increase of 74%. Now, if you look at from January 2012 to February 2012, there's a sudden 71 increase in sales from 16,000 to 28,000. From January 2012 to March 2012, it more than doubled from 16,000 to 33,000. You'll find these handwritten totals on Appellant's opening brief on page 48 and the spreadsheet on Appellant's Exhibit 19, page 81. The department also performed a markup of cost analysis to compute taxable sales. The schedule is on your Exhibit A, starting on page 97. Audited purchases were calculated using the cost of goods sold amounts claimed on the federal income tax return. The department adjusted for additional purchases of $38,000 as noted on the test of 2011 purchases invoice. Then consideration was made for supply items and the cost of food for self-consumption. Shelf tests were performed, which revealed an audited markup of cost of 166%. Now keep in mind on the federal income tax return, it was in the 40s and 16% when we use their purchase invoices. So the calculation of taxable sales using purchases and markup of costs revealed taxable sales of approximately $1,498,000. This amount supports the reasonableness of the audited taxable sales of $1,483,000 computed using the 3-day observation test. The difference between the two tests performed is only 1%. The department wants to emphasize that the audited taxable sales calculated in the 3-day observation test are lower compared to the sales computed using the markup of cost method by around 15%. The 3-day observation test, which is the lower of the two tests in this case, was used by the department. So another analysis that the department performed to support the reasonableness of our finding is the cash to credit card method. That information is on your Exhibit A, starting on page 162. Audited 2011 credit card ratio of 19.65% was used to compute the taxable sales of around $1,572,000 for the audit period. The estimated taxable sales of $1,572,000 computed using the credit card method support the $1,483,000 the department computed using the 3-day observation test. The department wants to emphasize again that the audited taxable sales determined in the 3-day observation test are lower compared to the sales calculated using the credit card method. The difference is about $89,000 or less than 6%. So now the department had done 3 examinations. The lowest of the 3 tests, which is the 3-day observation test, was used by the department. California imposes sales tax on a retailer's retail sale in the state of tangible personal property, measured by the retailer's gross receipt unless the sale is specifically exempt or excluded from taxation by statute. Although gross receipts derived from the sale of food products are generally exempt from sales tax, sales of food sold in a heated condition and food sold for consumption in a restaurant are subject to tax. That's Revenue and Taxation Code 6359. When the department is not satisfied with the accuracy of the tax return filed, it may base its determination of the tax due upon the facts contained in the return or upon any information that comes within its possession. It is the taxpayer's responsibility to maintain and make available for examination on request all records necessary to determine the correct tax liability, including bills, receipts, invoices, or other documents of original entry, supporting the entries in the books of account. That's section 7053 and 7054. If a taxpayer's records are insufficient or are proven unreliable, it is appropriate for the department to compute and estimate the taxpayer's liability by alternative means. That's section 6481. When a taxpayer challenges a notice of determination, the department has the burden to explain the basis for the deficiency. Where the department's explanation appears reasonable, the burden of proof shifts to the taxpayer to explain why the department's asserted deficiency is not valid. Except as otherwise specifically provided by law, the burden of proof is upon the taxpayer to prove all issues of fact by a preponderance of the evidence. That is, the taxpayer must establish by documentation or other evidence that the circumstances it asserts are more likely than not to be correct. Here, purchases recorded on Appellants 2011 purchase summary exceed the cost of goods sold shown on the 2011 federal income tax return. The book markup is less than 17% for 2011. That's if we use the purchases recorded on the purchase summary. Appellant did not provide purchase summaries for 2009 and 2010. Now, if we use the cost of goods sold shown on the federal income tax return, the book markup is a bit higher with 43.66% in 2009, 44.52% for 2010, and 48.89% for 2011. The department once again expects these markups for this type of limited service restaurant to exceed 150%. These low markup values are an indicator that taxable sales are understated and books and records are unreliable. The department was unable to verify reported sales due to the lack of reliable records. When it's determined that records are such that sales cannot be verified by a direct audit approach or reliance cannot be placed on the records, as this case here, the department must calculate the sales from whatever information is available using indirect methods to determine the correct tax liability. Now, the use of average daily sales resulting from the observation test is an approved method of establishing taxable sales. Therefore, the burden of proof shifts to appellant to provide evidence to support adjustments to the audit. The department's observation test covers 3 full days, which is sufficiently a large sample. The audited taxable sales from the observation test resulted in markups of 153% for 2009, 165% for 2010, and 178% for 2011, and an overall markup of 163% for the 3-year audit period. That would be on your Exhibit A, page 162. This overall markup from the observation test is close to the markup we calculated during the shelf test of 166%. The audited markups are within the expectation and reasonableness for appellant's business. The department also calculated taxable sales using the credit card ratio method, and the outcome is slightly higher than the audited taxable sales calculated from the 3-day observation test we used in the audit. The department finds that the sales from the observation tests are representative of this business during the audit period. All of these tests relied on assumptions because of the lack of records. All of these methods showed substantial understated taxable sales. The difference between the highest and lowest estimate is less than 6%. But the fact that the variances are so small between these estimates show that these tests are reasonable and supporting each other. In addition, the department ultimately used the understated sales established from the observation test, which is the most favorable for the appellant. Therefore, we conclude that no further adjustment is warranted with this issue. I do want to address Appellant's comment regarding the Great Recession. We do sympathize with Appellant's homes foreclosing, his inability to pay the bills and levies for both the IRS and the Board of Equalization during the liability period. But this do not establish that the unreported taxable sales are excessive. These events are not basis for making an adjustment to the liability. As far as the Great Recession, which it's from December 2007 to June 2009, was the result of the subprime mortgage crisis. You know, the large financial institution invested heavily in mortgage-backed securities. There's expensive high interest loans were given to people. Then came the housing bubble. However, Appellant articles do not specifically address restaurants, specifically their type of restaurant, which is the limited service restaurants. And that's where my Exhibit J, summary report of the Economic Research Service, talks about that. And also based on my experience, and I have been with the Board of Equalization and now Cdtfa for almost 3 decades. In general, and the research support this as well, in general, full service restaurant sales do go down during a recession. I'm talking about facilities where guests are cared for by a server from the moment they sit down until the moment they leave. However, the limited service restaurants, like the ones where you pay up front before you eat the food, kind of like the Appellants, their sales normally do not fluctuate during an economic downturn. Food is a basic necessity, and this type of restaurant, not only provide convenience, but it's also more affordable than the full service restaurant. You'll even see that in today's COVID recession. The affordable counter service for pickup and to-go restaurants are one of the very few businesses doing well in this economy. Even the appellant during her presentation stated the business is booming. So that tells me that, that this restaurant is doing well on this recession and possibly also from the previous recession. That concludes my response to this issue. And once again, that summary report of the Economic Research Service talks about limited service restaurants sales are steady even through the recession. The other issue of this case is the finality penalty. Revenue and Taxation Code section 6565 provides that a notice of determination is due and payable at the time the determination becomes final. It provides that a penalty of 10% will be added to the amount of the determination if the determination is not paid when due and payable. In this case, the determination became final on November 3rd, 2013. An appellant did not pay the tax portion of the determination by that date. Therefore, a finality penalty of $7,200 was added to the determination. The department is willing to relieve this finality penalty for this case. Otherwise, the appellant has not provided documentation or essential information to support any additional adjustment to the unreported taxable sales. The department's audit findings are more than reasonable and fair. Therefore, the department requests the appellant's appeal be denied. This concludes my presentation. I'm available to answer questions you may have.
This is Judge Rosas. Thank you, Ms. Jimenez. I'm going to turn it over to my co-panelist. Judge Cho, do you have any questions?
This is Judge Cho. Yeah, just a couple quick questions. First, for the department, and I don't know if you have this information off the top of your head or not, but do you know whether the tax liability has been completely paid off at this point in time?
Judge Cho, it appears the tax was paid off, and of course, there's the penalty and the interest. But it appears that the tax was all paid off.
Okay, so as of today, the tax has all been paid off, correct?
That is correct.
Thank you. Appellant, it looks like you wanted to say something.
This is Pamela Lindo. Can you please clarify your question as far as a tax being paid off? Do you mean the total tax liability of the $78,000 where it now stands, Judge Cho?
My question was just for the tax, not the interest and penalties, but just the additional tax in the notice of determination based off of the revision.
Well, we know that the taxpayer has paid, he's on a payment plan of $1,000 a month, and he has paid approximately
About 80,000 so far. I'm not 100% sure because I don't receive any information on how much do I owe in the past 2 months or so. So I'm not clear, but from my calculation, I probably pay about 80,000. I'm not 100% sure.
This is Pamela Lindo speaking. Yes, he has been paying since they allowed the administrative protest at $1,000 a month. So it's 9 years later, that equals about $80,000, and he's still paying $1,000 a month.
Okay, thank you. And back to the department, just to confirm again. So the department is recommending relief of the finality penalty, correct?
Judge Cho, that is correct. And as of last night, I did look at the balance, and the tax at this time has all been paid off. And there's still that, of course, the penalty and some portion of the interest.
Great, thank you.
Okay.
The other question I had was actually for appellant. Appellant, would you mind just giving a quick, I guess, counter argument or reasoning as to why the department's credit card ratio test would not be a reasonable standard here to test their audit in this case? Because from what I understand, they received the credit card information from the credit card companies and then applied an error rate and then projected that based off from the credit card.
Judge, so this is Judge Rosas, and my sincerest apologies, Judge Cho. I don't want to overstep or interrupt your question, but the appellant is going to get an opportunity for rebuttal. So I don't know. At this point, we were just asking questions of Cdtfa, any clarifying questions. And then after the appellant was done with her rebuttal, we were going to open up to questions of either party. I don't know if you want to reserve your question because it may be something that Ms. Lindo is going to address anyway as part of her rebuttal.
Oh, I apologize. In that case, Ms. Lindo, would you just mind addressing that question in your rebuttal?
This is Pamela Lindo. Judge Cho, yes, I will.
Thank you very much. Those are all the questions that I had. Thank you.
This is Judge Rosas. Judge Tay, do you have any questions for Cdtfa?
Can you hear me? Great. I have no questions, but thank you. This is Judge Tay.
This is Judge Rosas. Judge Tay, I just want to mention we've been waiting all day to hear you speak, and then when your mic works, we have no questions.
I'm glad I didn't disappoint.
Thank you, Judge Tay. So at this point, we're going to turn it over to Ms. Lindo for rebuttal. Ms. Lindo, you have up to 10 minutes for your rebuttal to address anything that Cdtfa mentioned in their presentation. You may begin when ready.
I would first like to reiterate as far as the observation test and the shelf test that they're comparing these two methods, and they're picking the one method that is lower to be in the taxpayer's favor, but the two assessments are still large in the $750,000 range. Again, I would like to cite Payne versus State of Equalization. And you could see the exact site in Exhibit 42, page 155. In its holding, the Court of Appeals discussed the importance of when using data from a test period and applying the data to an audit period to determine sales, the condition and conduct of the taxpayer's business must remain substantially similar during both periods. applying the pain test to the taxpayer's case, the test period in the taxpayer's case would be 2013 for the shelf test and 2012 for the observation test. These were both, like I said, post-recession years, meaning the recession was over and the business was back on track. The audit period would be 2009 through 2011. Because the audit period was during the Great Recession, where most consumers were still dealing with the extreme downturn of the economy, and also the taxpayers' sales were way down. So he would not have, for the shelf test that was conducted in 2013 using purchases from 2013 and the menu from 2013, this information is going to be skewed. He would not have had as much sales, and he would not have bought so many items in a post-recession period in 2013 that he would have in a recessionary period. So the condition and conduct of the taxpayer's business certainly did not remain substantially similar during both periods. In this case alone, which is very much on point, shows the department's error in using the shelf test and the observation test. The observation test was conducted in 2012. The 3 days that they used were typically for the taxpayer's neighborhood. It was biased. One day was a Saturday, right? Saturday is typically the taxpayer's most busiest day. The other days were, I think it was October 13th, and the other day were days, the first of the month and the last of the month. Typically, this is when people get paid. In a low-income neighborhood, this is when they get their, what they call county checks or county assistance checks. So they would have money, more money than before. So again, citing pain versus State Board of Equalization. I mean, the test periods are not similar, so neither one of these tests should be made or should be used. As far as the department's analysis or research, when I looked at this research, it compared full-service restaurants to fast food restaurants. Again, Hungry Joe's is not a fast food restaurant. The price of the food, like I said, Jamaican food is very expensive. Oxtail dinner is like $20. A fish dinner right now is like $25. So it's not, it definitely cannot be considered fast food. Fast food is like a burger that costs what, $5. So it's like a full service restaurant only. I mean, the prices would be the same as a full service restaurant, but it's takeout restaurant because he does not have the space. And as far as her comment about the business doing well in the middle of a recession right now, we're in the middle of a recession. The reason why it's doing well right now is because the consumers, they're affected by unemployment. However, unlike in the recessionary period back then, they're receiving unemployment checks from the EDD. So they have extra money. If you remember, they were getting $600 a week on top of what their usual weekly unemployment check would be. So if the department is following the news and following what's going on with COVID, how it's affecting some of these restaurants, they're actually turning around, and they're actually a lot of restaurants are doing very well. The taxpayer is making record sales, and the only thing that we can apply this to is the COVID situation and the unemployment checks for people in that type of neighborhood who are mostly unemployed because of this COVID situation. I would agree that if the department is unsatisfied with the taxpayer's records, which, like I mentioned, I think it was adequate and sufficient, observation test and the shelf test would be used, could be used. Maybe they would have no choice but to use these tests. However, citing pain versus State Board of Equalization, the test period and the audit periods have to be similar in order for those tests to be sound. And I think that's all I have to say. Did you have anything to add?
Thank you very much, Ms. Lindo. At this point, I'm going to turn it over to the panel to see if they have any questions of either side, and we will start with Judge Cho.
This is Judge Cho. I might have missed it, but appellants, did you respond to the credit card ratio analysis as to why that wouldn't be a reasonable standard?
This is Pamela Lindo, Judge Cho. I'm looking for my exhibit, but I did my own credit card ratio analysis. Exhibit 19, pages 79 and 81. 79 through 81. And to get the monthly ratio, you divide the credit card sales by total monthly sales. And I use merchant billing statements, which are in Exhibit 20, to calculate the monthly credit card sales. And the data shows that the ratio for 2009 through 2010 and 11 respectively was 22,000, 30,000, and 44,000, an average of 32,000. So based on my calculation, the credit card ratio was higher than what the department calculated. So this means that during a recessionary period, as cash sales decreases, credit card sales increases. This information is logical, and it is reasonable to assume that during a recessionary period, when consumers' disposable income, that's cash, decreases, they rely more on credit card sales to buy the things that they want to buy. They may not be able to pay the bill at the end of the day, but they can use that credit card. For 2012, a post-recession year, as cash sales increased at a higher rate compared to the rate of credit card sales, the credit card ratio will also decrease, which it did in 2012 at 34%. So the information that I have shows a way higher credit card ratio than what the department has.
Okay, thank you very much. Those are all the questions that I have.
This is Judge Rosas. Thank you, Judge Cho, and thank you, Ms. Lindo. Judge Tay, do you have any questions for either party?
This is Judge Tay. I have no questions for either party. Thank you.
This is Judge Rosas. I do not have any questions at this time. I think we're getting close to wrapping this up. I know we estimated 2 hours for this oral hearing, and we're close to the 2-hour mark. I do just want to say to Mr. Distin, I know how difficult the restaurant business can be. And from everything I've heard today, sir, I just applaud your efforts. For lack of a better term, it seems that you are a survivor and that you've done really well to weather the storm, as they say. And I was happy to hear argument from Ms. Lindo that things got a lot better for you towards the end, sir. And lastly, I just want to just make a comment. Ms. Lindo, Ms. Jimenez, great oral advocacy from both of you. I realize neither of you are attorneys, but I just want to applaud your efforts. Even during the pre-hearing conferences, both of them, I know that we can be adversarial, but you did that with dignity and civility and the utmost professionalism and courtesy. And so I want to thank you both for how you comported yourself during this oral hearing. In terms of last questions, does Ms. Jimenez, does Cdtfa have anything else they'd like to add?
Judge Rosas, this is Mary Flor Jimenez. We have nothing else to add. Thank you.
This is Judge Rosas. Ms. Lindo, your client is the appellant, so I do want to give you the last word. Other than what you've already argued here today, and other than what Mr. Distin has already testified to, other than the exhibits you've already submitted, and there are a lot of exhibits, but is there anything else that you want this panel to know in order for us to make a well-informed decision?
I would like to, Judge Rosas, this is Pamela Lindo speaking. I would like to have the department and the judges look at the big picture of the Great Recession. As I said in the beginning, the taxpayer was offered $30,000. Now that compares to the $1.7 million. The fact that he turned $30,000 down shows that he knew that he paid the right amount of tax. If he thought that he was hiding income to the tune of $1.7 million, at the offer of $30,000, he would have gladly taken that just for the situation to go away. So that talks to the honesty of the taxpayer and, this whole situation. And as I said, there is no way possible that a taxpayer owes this money. If anything, I would say that because his books and records weren't perfect, maybe a portion of the negligible penalty or the finality penalty, but there's no way possible that he owes $728,000 during this recessionary period. It makes absolutely no sense, respectfully.
Thank you, Ms. Lindo. I have no further questions for either party, so that concludes the hearing and the appeal of W. Distin. The record is now closed and the matter is submitted as of today, September 29th, 2020. The parties will receive this panel's written decision no later than 100 days from today. Thank you all very much. I just want to remind everyone, stay safe, stay healthy.